Hello students, today we are going to have an overview on insurance policies and the essentials required for effective correspondence with the insurance companies. It could be seeking claim compensation, seeking loan or opening of an insurance policy for own or near and dear ones. In the recent past, several insurance companies have started their business in India. The oldest one being Life Insurance Corporation of India. Many private players have entered in the market such as AXA Life Insurance, Fortis, Prudential, Lombard and Aviva Life Insurance. India has seen a tremendous growth rate in terms of insurance policies offered by various companies, and due to growing population of India, the number of insurance policy seekers are rising. We will have a briefing on various insurance activities and functions and the need to correspond in an effective way by the people. We will see what insurance actually is. Insurance means indemnity or protection against risk of loss. Insurance is a popular means in business to protect from uncertainties. Insurance is a cooperative device to spread the loss caused by particular risk over a number of persons who are exposed to it and who agree to insure themselves against the risk. Insurance is a sort of provision which a wise man makes against unfortunate happening. Elements of insurance. Contract. It is the contract of indemnity between insurance company, that is insurer, and policy holder, that is insured. Existence of insurable rights. There must be some risk which the insured wishes to insure. The risk insured must be insurable, that is, the risk be such which insurer may undertake to indemnify in event of loss. Premium. The insurer pays in lieu of premium must undertake to pay for the loss that may be suffered by the insured on happening of contracted misfortune or loss. Implied warranties. These are the conditions which are crucial to any insurance contract. Some of these relate to legal terms and others to fair disclosure of facts, etc. Principles of insurance. The first one, principle of utmost good faith. It is the basic principle of any insurance contract. The insured must give the insurer complete, true and correct information about the subject matter of insurance. There should not be any misrepresentation or concealment of any facts of any kind, as insurance is for protection and not for profit. The contract of insurance will be null or void if wrong information is provided by the insured. Principle of insurable interest. The insured must have insurable interest in the subject matter of insurance. For example, owner of the building has insurable interest in the building as he is getting income from it. If he sells the building, he will have no interest in it. Ownership thus is the most important test of insurable interest. Principle of indemnity. Indemnity means security against loss. Compensation in insurance contract will be paid in proportion to the loss actually incurred. Example, if a machinery worth rupees 50,000 is insured for rupees 40,000 and the actual loss due to fire is rupees 25,000, then compensation of rupees 25,000 will be paid by the insurance company. The insured thus compensated for the actual loss incurred. This principle is applicable to all life insurance contracts. Principle of subrogation. It is applicable to all contracts of indemnity. When compensation is paid for total loss, all rights of insured in the respect of subject matter of insurance are transferred to the insurer. This principle prevents the insured from making profits out of loss. Principle of contribution. There is no restriction as to the number of times the property can be insured, but no loss. Only the amount of actual loss can be realized from one insurance, that is contract, or from all insurance together. Types of insurance: life insurance, fire insurance, accident insurance, marine insurance. Let us see in brief. First one, that is life insurance. Life insurance means insurance against risk of human lives. Example, death, illness, accident, disease, etc. Life insurance can be taken on own life of a person whom one has an insurable interest. Example, a person can take insurance policy on life of his wife or husband or children. This is called assurance. Life insurance in our country was done by Life Insurance Corporation of India only. However, now the government has opened the insurance sector for private companies. Several private companies, example AXA Life Insurance, Prudential Insurance, Fortis Insurance have started life insurance policies. Some of the important life insurance policies are whole life policy. The policy continues up to the death of the assured and the policy amount is paid to the legal heir of the assured. Such a policy is meant for making a provision for the dependents of the assured. The premium is usually low. Second one, that is endowment policy. The policy for specific period and the amount of the policy is paid after the maturity of the insurance policy or death of the assured, whichever is earlier. The policy combines the advantage of investment with that of provision for dependents in case of an untimely death of the assured. The premium is usually high. Annuity policy. Under this policy, a certain amount is paid to the assured regularly up to a certain period or up to the death of policyholder as per the terms and conditions of the contract. Joint life policy. A joint life policy is a policy taken by two or more persons on their joint lives, say in the joint names of husband and wife or partners of a firm. It is payable to either of a surviving persons on the death of any of the joint policy holders. Now, we will see some of the insurance letters which are used for the correspondence quite frequently. Example, a covering letter for an insurance policy. Life Insurance Corporation of India, Chennai Divisional Office, PB number 33, Chennai. Mrs. Neha Mittal, 224, New Extension, Chennai. Dear Madam, in continuation of our letter number, date, we are glad to enclose your life insurance policy number, that is 4564621, bearing the details as mentioned in our past letter. The first premium receipt for rupees 5000 is also enclosed. Please acknowledge the receipt. Life insurance offers the most reliable security against any unfortunate mishaps. It promises care and protection to your dependents. You will always feel happy about this timely decision to take an insurance cover. We are quite sure in future you would like to supplement the present policy through additional covers. Please go through the details of the policy carefully, and if you have any queries, we shall be glad to resolve it. Yours faithfully, A.K. Murthy, Divisional Officer. Example 2, a letter intimating the maturity of a policy. Dear Sir, the policy number, own life. We have the pleasure to inform you that your above policy will be maturing for payment on 25th August 2016. We need these documents to settle your claim against the policy promptly. The discharge form, the policy in original, any dates of assignments affecting your title to the policy and the last premium receipt. We find that your age is yet to be admitted, since the settlement of claim is subject to the admission of age. Please send the school leaving certificate as mentioned in the proposal to enable us to admit your age. In case you are unable to do so, please send any of the age proofs listed in the enclosed memorandum. The payment will be made by cross check on Oriental Bank of Commerce, Dadar, Mumbai. If the discharge form etc. are received by us sufficiently in advance, it may be possible for us to send you the check so as to reach you on the date of the maturity itself. Yours faithfully, M.V. Dev, Divisional Officer, and the enclosed letter. Students, now we will study second type of insurance policy, that is marine insurance. Marine insurance is a contract whereby, in consideration of the payment of a sum of money called premium, the insurer undertakes to indemnify the insured to the extent specified in the contract against marine losses. Types of marine insurance. The first one, voyage policy. This policy provides cover to all marine risks of a particular voyage from one port to another. The policy mentions the port of departure of the part of destination between which the risks are underwritten. Example, Mumbai to London. Time policy. In this policy, the subject matter is insured for a specific period. Generally, the period of policy is not more than 12 months. This policy is effected from 6 am 1st January 2016 to 6 am 1st January 2017. Mixed policy. It combines voyage of time policy. It covers the risk during a particular voyage for a specific period. Example, Mumbai to London for 3 months. This policy is issued for ship operating on a particular route. This policy is suitable for insurance of cargo. Valued policy. In this policy, the value of loss to be compensated is fixed and clearly mentioned in the policy. This value is agreed between the insurer at the time of taking the policy. This value also known as insured value. Floating policy. This policy only mentions the amount for which the policy is being taken out. The policy is suitable for those merchants who make regular shipment of goods and do not wish to take out a separate policy for each consignment. Procedure for taking marine insurance. The first one, that is proposals. The proposer may approach to the insurance company directly. In marine insurance, only the slip, so called the original slip, is used for proposal. The proposer fills the original slip with duly filled required information truly and correctly. The proposer sends original slip and necessary documents to insurance company. Acceptance. Insurance company decides about whether to accept the proposal or not. If insurance company decides to accept proposal, then insurance company signifies its acceptance by initialing the slip. The company also writes the sum they are prepared to accept on the slip. The premium is decided by the insurance company. Issue of policy. After receiving intimation, the insurance company sends a cover to the policyholder. The cover note contains information about terms and conditions, amount of premium, etc., on which the insurance company has accepted the proposal. The insurer sends the first premium to the insurance company. After receiving the premium, the insurance company issues a duly stamped policy under company's common seal. The policy is the legal evidence of contract between insurer and insured. Policy contains information about subject matter, insured, amount of premium, period, name and address of the insured. Now, let us see the correspondence letters for marine insurance policies. Example 1, your consignment of electrical goods to Japan got damaged during the voyage. Lodge a claim for compensation to the insurance company. Dear sir, we have just received a report from our consignee in Japan stating that our shipment of electrical goods sent per Jalport 21 has reached them in damaged condition. The shipment was covered by a valued policy number issued by you on 2000. The details of the damage are as under. Description, that is amount: 20 boxes containing electrical goods found in soaked condition, the amount is 10,500. 25 cases of anchor switchboards found broken and damaged, the amount 24,500, total 35,000. To this must be added 10% of the invoice price for estimated loss of profit 3,500 plus the surveyor's fees, that is 1,500. So, the total claim due is 40,000 rupees. According to the standing instructions, the damage was surveyed by your authorized representative in Japan, Mr. Arun Kapadia, whose report we have enclosed along with the original invoice in support of the claim made. The policy and the cash receipt for the surveyor fees are also enclosed. We now request you to arrange to pass the claim for payment and send us the check for the claim at an early date. Yours faithfully, M.K. Lodha. Now, we will see another example. Having received a claim for compensation for damage to goods under a marine policy and a surveyor's report, the insurer finds that the claim is in order and informs the client about it. Dear sir, claim under marine policy number. In continuation of our letter number, claim of, we are glad to inform you that our surveyor's report in connection with your shipment to Japan has just been received and we find your claim in order and accept it in full. We have accordingly passed our claim for payment and have enclosed a check for rupees 40,000 in full settlement. You are requested to sign and return the enclosed claim voucher as acknowledgement of the receipt of the check. Yours faithfully, enclosed is the check for rupees 40,000 and claim voucher. Now, we will see another type of insurance policy, which is fire insurance. Fire insurance usually covers loss by fire of domestic or business premises and their contents. A policy taken to cover such loss is often extended to what are termed as special perils, as for examples hurricanes, earthquakes, tornadoes, floods and civil riots. Linked to this kind of policy is consequential loss insurance, which enables a company to receive payment in lieu of earnings while repair of damage and rebuilding in progress. It is a contract whereby the insurer, in consideration of the payment, undertakes to indemnify the insured against the loss of damage to property due to fire during a certain period, generally a year agreed upon. The contract can be renewed at the end of the specified period. The important fire insurance policies in use are valued policy, average policy, blanket policy, floating policy, consequential loss policy and loss of profit policy. Stages of arranging insurance cover. Inquiries regarding terms and conditions of insurance. The person seeking insurance cover completes a proposal cover. The insurance company scrutinizes the proposal. It assesses the risk and fixes a premium to be paid. The premium is paid and the cover commences. In case the insured suffers a loss, the policyholder makes a claim for compensation. The claim is investigated. If it is found to be valid, the compensation is paid from the pool. Example, a letter to the insurance company to assess the loss by fire. Dear sir, we are to intimate you that a fire broke out in the factory godown at 225 Prachin Park, Agra last night, 12th August 2003. The fire service personnel did their best to control the fire and minimize the loss to the stocks. We request you to send your surveyor to assess the loss and arrange for an early settlement. We are lodging a separate claim in the meantime. We look forward to an early action and fair settlement. Yours faithfully, N.B. Tripathi. Now, we will see another example. Insurer's reply to the above letter. Dear sir, we acknowledge your letter and regret to read about the damage caused by fire in your factory godown. We are here to help you departing Mr. Lakshman Prasad, our fire surveyor, who should be on his way to complete on the spot survey. He carries instructions to act as fast as possible. Your claim will be taken up for further action immediately on receipt of his report. Meanwhile, kindly fill in the enclosed forms to help us to get a complete picture of this mishap. Your cooperation with our surveyor to collect all relevant facts will be of great help to us. We assure you of our earnest endeavour to settle your claim at the earliest. Yours faithfully, B. S. Dubey, enclosed claim forms. We will see one more example, that is letter informing settlement of claim. Dear sir, settlement of claim fire policy. We have received our surveyor's report on the damage caused by fire in your factory godown on. The claim form submitted by you have also been processed and we find them correct in all respects. According to the report of our surveyor, the damage to your property estimated at rupees 1,25,000. Accordingly, we have enclosed a check of Punjab National Bank, New Delhi for rupees 1,21,000 in full settlement of your claim, including rupees 1,000 paid by you towards the cost of extinguishing the fire. Please send us the receipt for the said amount. We have also enclosed a fresh proposal form for renewal of insurance cover for your godown. Kindly return it to us duly filled in all respects along with a check for the premium. Yours faithfully, B. S. Dubey. So far, we have seen various types of insurance policies, correspondence letters, which are being used quite often in day-to-day business activities. Considering the growing number of people taking insurance policies for various reasons, the correspondence holds of key importance for the insurer as well as for the insured. All the best for the correspondence with insurance companies in the future. Thank you, students.